Hi guys, Ray here. Just going to do a 5-10 minute introduction to departmental final accounts. In the very unlikely scenario that it would come up in section 1 in accounting. So far, departmental final accounts has really only been an ordinary level question because the repetition involved in it suits ordinary level students. There's not too much of a challenge in it, and basically all you're doing is dividing up your trading profit and loss account into different departments: Department A, Department B, and total. Hence, that's why it's been at ordinary level, because it's just doing the same thing 3 times. Now, it's come up on ordinary, on a higher level in section 2, and I'll just maybe refer to that a little bit later. Anyway, this won't take long because there's not an awful lot in this question. So if we can just take a sample question on this. Now you have the notes to it. So if I just take that sample question on Brady, you can see, and it's on page 2 in your notes, you can see that the two departments are your grocery and hardware departments. And the actual trial balance is pretty much the same, except when you come down here, you just have grocery department, you have opening stocks, purchases and sales, and carriage. And with the hardware department, you have opening stocks, purchases and sales, and your returns outward. So they're just examining you on these two separate things, carriage and returns outwards, which you're very familiar. Other than that, the question appears the very, very same as normal trial balances would be. And actually, remember I mentioned to you about the advertising. You can have an advertising due figure there, and then this is the amount that was advertising was paid for the year. It's like a normal adjustment. I think I did that one with you. That's probably where I got it from. Anyway, your trial balance is the same. The adjustments in this question are very, very basic. You're just given your opening and closing stocks again for grocery and hardware, and then you were told that there was sale or return there with hardware. New fittings, that's the installation. That's like using employees and materials to increase the value of your buildings, or not buildings in this case, it's fittings. Your depreciations, debenture interest, sort of that advertising. Now, here, this is the only new part. You're told floor space is divided in these percentage ratios. Grocery 80%, hardware 20%. And you're told that expenses are applicable to both departments should be divided on the basis of sales or floor space. So that's really the only thing you've got to do is your expenses. You've got to allocate them between either a sales basis, and the sales basis would be up here. So your sales here are 600, here are 400. So the sales basis would be 6:4, which would be 3:2, and the floor space basis is on 80%, 20%, so that's 4:1. So your job is just to divide them up between sales and floor space basis. It's pretty much it. So let's just look at the solution here. Now, this is a pretty cumbersome presentation. As you can see here, they've got 6 columns. Now, my preferred way of doing it would be like this. Just have 3 columns. Just have a grocery, a hardware, and a total. And now it's not very clear on this, but let me go back to this then. So you have your sales less your returns. Okay, so in my case, it'll be here like that. Grocery, hardware, total. And then you just do your opening stock plus your purchases minus your closing stock equals your gross profit for grocery, for hardware, and for total. And just take one from the other. And there's your gross profit. So it's just like three trading accounts, just side by side. Now, when you come to the profit and loss account, and again, it's clearer on this. What you've got to do in the profit and loss account is, with your expenses, you've got to divide them up on whichever is the most suitable method. And the most suitable method for salaries and general expenses would be sales. So you divide up your total here, 64,600, on the basis of sales, and sales is again 3:2. So you divide that up on that basis. Directors' fees would also be sales on a sales basis, 3:2. Now, light and heat and depreciation of both fixtures and fittings and buildings, the most appropriate when there would be on floor space basis. So that's on the basis of 4:1. 4:1, 4:1 of these. Yeah. Now, pretty much as like you would expect, your selling and distribution would be on a sales basis. So this would be on a sales basis here, which is 3:2. 3:2. That's it, folks. Not an awful lot other than that, because then you revert back into normal accounts and normal presentation. So you got your operating profit, and less your debenture interest, there's no investment income, less taxation, minus dividends, P&L. That's it. So really, the only thing you've got to do is divide up your expenses in the ratio of sales and floor space. The balance sheet, again, is uneventful, which you like to hear. Very straightforward balance sheet. Nothing, just to make sure you got two stocks, you got grocery and hardware, but everything here is exactly the same. There is absolutely no difference whatsoever. It's very, very straightforward. Just to reference, okay, now the adjustments in that question, in this question on Brady, they were pretty straightforward. Now, if you want to get an idea of what it's going to be like if this eventuality happened, this is the last time that this came up, and it was in 2017. Yeah, pretty much the same. Now, the import duty there, well, import duty is like carriage inwards. And you have to do the very, very same thing. So there are your adjustments there. Pretty straightforward. And the only reason it came up there, all you had to do was a departmental trading profit and loss account. You add a balance sheet to it, then it becomes 120 marks. Now, if the very, very unlikely chance of this coming up in section 1, the adjustments would be at a par with like the adjustments that you would have with a normal sole trader or company account. And the nearest one that you're going to get to that would be, I have a question in your notes on Morgan. And it's a question taken from the book. And those are the type of adjustments that you would probably get, something of that nature. Valuation of closing stock, goods in transit, insurance and advertising due, revalued buildings. The allocation of expenses are the same, and a bank reconciliation and recommendations. Now, I have that old one in there, the preference dividend due be paid. Look, that's about all there is. And again, just to recap for you on this departmental, all you've got to do is you've got to just do 3 columns. Now, I know the presentation, the clarity rather of the picture on this is not brilliant, but all you have is you just have your groceries column, you have your hardware column, and you have your total column. And then you just get your sales minus whatever there is. You get your opening stock plus your purchases minus your closing stock, and you get 3 gross profits. You get 3 gross profits, and then you just allocate your expenses. either on a sales or on a floor space area. Just allocate your expenses, and then you're home and hoosed. Okay, talk to you again.